So I need to refresh the chart now. And let's hope it saves correctly and market replay. And now you see the Bloodhound template. So if you load Bloodhound into it, you need to refresh it. I mean, if you're building this, as you're building it, if it's already enabled, and then you add Bloodhound, then you have to refresh it. I'm going to show the entry. I'm going to go and delete everything now. I'm going to check and make sure everything's saved. Yeah, it's saved. And now I'm going to apply the market geometry. And then open up this Bloodhound template. Remember, these are not indicators, they're lines. So if you don't have bars coming in, then you need to open up this Bloodhound template. You're not going to have to do this with the new reader, the new version, which will be hopefully in beta by the end of next week. But you do have to do it for the old one. You have to open up, see we got the 30-minute chart here that we're accessing these lines from. You just open it and close it is all you do to initialize the reader, to make sure that we're now looking at the 30-minute chart because we don't have any bars coming in. Normally you just have to do this, basically you just have to refresh the chart at the beginning of the day and then it's good to go because you have bars coming in. But I'm just going to ensure that we are actually reading these other charts by opening it and closing it. That just reinitializes the indicator. Or whatever, restarts it. Same difference. So now I'm going to turn it on and hope for the best. So when we come down here, we have volume divergence, we have double divergence in the RSI. We're touching all three of these areas. Then we're going to enter long. We're going to enter long 10 contracts, and we're going to take off the first 4, 2 ticks below that 61.8 retracement. See that? Which is about 20 ticks away, 19 ticks away. And then we're going to buy these 4 back to scale in 15 ticks below. So let's see what happens. Once we hit that and that bar closes, this should come up 15 ticks below current price. You can see we've got 5-minute trend line for 2 targets. That's this one right here. See my mouse? And then we got 2 ticks, 2 contracts at 100 ticks. That's this one here. And then we have 2 contracts at the 30-minute trend line, which is right here. See? So let's see if we can't fill those 4. Uh-oh, we're going to get stopped out. All right, now we have a swing low right here.
Order filled.
Okay, boom, that bar closed. Where did these 4 come up to? 15 ticks below the close of that bar. Isn't that cool? That's awesome. You could bring it up to market price based upon something else that happened. You know, like let's say we came up and then we pulled back to a baseline. Let's say that we had a baseline here. Hang on. Let's say that we had a baseline here like this. All right, and we're already long a certain amount, whatever, or even a lower median line. And then it comes back and it touches that. Well, right when it touches that, I could bring this 4 to scale back in up to market price. I could bring it up to the bid or the ask. And it's a limit, but if you bring a limit up to buy the ask, sorry, it's essentially a market order. So that's how you work the scale in aspect of this. It's just a matter of knowing how to do it is all. I mean, it's not going to say scale in on it, but that's how you do it. You follow me? So just a little trick. Is this not cool or what? Yeah. Sure glad I didn't try to complicate it either. Complicated enough, huh? So now we're tightening up these stops 2 ticks below this swing low. And then as we start coming up, we'll start tightening up these stops behind the more recent swing lows. So it hasn't found this as a swing low. I should have used a little bit smaller swing setting, I guess. Once I have my swing indicator built into this, then it will be easier to do. All right, so now we're about to break this baseline. I think 2 more bars, we will have moved past it enough to start tightening these stops up. Yeah, so now we've moved far enough past the baseline, and we have these 2 ticks, these 2 contracts tightening up behind this swing low, which is a much faster swing. Okay, so now 2 of these 4 are attached to this swing low here, and then in a minute, when we fill this order and we get a big wide-ranging bar, 2 of these will tighten up behind the low of that bar. All right, so maybe we'll get a swing behind this low here shortly with that tighter set swing. I think if we break this high, then we'll get a swing low here. Not quite. I should have put that swing indicator on the chart, but we'll do that next time. Build out some more complex rules. Well, maybe not yet. I think we'll do this a couple of times. All right, so now, there we go. Okay, so we did get a swing low here, but it didn't plot till way out here. See, my indicator will plot this swing low on this bar, on this green bar right here, and not have to wait until this big wide-ranging bar. So to give you more responsiveness, basically. And you'll be able to tell whether it's a minor swing, an intermediate swing, or a major swing. But that's not ready yet. That'll be another month probably. And then 2 of those stops are now behind this swing low, this bar's low, because it's an extreme spike at the high, right? So if this bar closes as an extreme spike, then it tightens up 2 ticks below that one, you see? And then if we fill this 100 ticks, this stop loss order will close. You see it's C. See the C right there at the end of it? C, B, C, B. So C is attached to C, B is attached to B. So if we fill C at 100 ticks, the stop loss goes away, and then we're left with the two contracts to sell at the 30-minute median line, which has been adjusting. So it's at 19 right now. I must have set this chart to not show the prices of these orders. I don't remember doing that. Huh. Matter of fact, I didn't do that. It's Ninja. Good old Ninja. All right, so we're about to fill that momentarily.
Order filled.
And now that stop is gone. And it's still at 19. Thought I remember this going up to 23. I think it stays at 19 actually. Let's see.
Order filled.
And there we just got filled. No. What just happened here? Oh, I know what it did. Okay. Remember? Yeah. See, we have an extreme spike at this high. So at the close of that bar, it tightened up that last one behind the low of that bar. That's something I didn't do in the first one. Because remember, with this trailing stop, it was this one that was attached to the 30-minute center median line. I set that trigger to repeat how many times? 3 times, but only repeat when triggered. So it didn't tighten up behind this swing low. Anybody tell me why? This bar's low. Why didn't it tighten up behind this bar's low? Why didn't it go right there? Yeah, RJ, I think in some instances, I'm not sure how that works. We'll plot it on the chart next time, but yeah, I think it has to break. I'm not sure how that works. Maybe it has to break the previous swing high before you get the swing low. However it works, it's no good. So nobody knows the answer to that question? Why it didn't tighten up behind that? Yeah, no spike. You got it, Craig. Harold and Craig got it. My 2 best students. So if I hadn't have set that to 3, it would have stopped at this one right here. Mark got it. Mark got it. So you had an extreme spike on these two, and it tightened up behind this one first, and then this one. No extreme spike on this one, so it didn't update to the low of that bar. Because why? Because I didn't set it to do it on every bar. I set it to only do it when re-triggered. So I could have unchecked that and it would have done those 3 bars in a row and I would still be in the trade. But I said only do it when re-triggered up to 3 times. And so it exited me at the low of this bar, which is probably a pretty decent exit. You just had no way of knowing that it was going to do a volume divergence high. Well, yeah, kind of you do, because that's typically what you would expect with a move like this. You would expect it to have the first initial very strong momentum move with a huge amount of volume and then come down and then go back and retest that high and move even higher, hopefully to a target in market geometry, which of course is from lower median line to center median line, which is why we use market geometry. You know, what else are you going to use? ATRs. And then you get that volume divergence high and divergence high. So how cool is that? It's nice, isn't it? All right, guys. So that's it. What kind of questions does anybody have? Was anybody able to actually build this as we're moving along through it? Jim is saying, would it be too much to go over the new toolbar update? Yeah, it's just the one indicator that I've been using this whole time. It's the reader value. They're working on Bloodhound 2.0. He's been working on Bloodhound 2.0 for a long time, and then just moved to BlackBird to finish it. But it's going to be on Ninja 8. So Bloodhound 2.0 will be for Ninja 8. So yeah, the reader value indicator is the update. And that is I don't want to get too much stuff on here. Let's hide all the warning lines. Get rid of all this stuff. So the reader value indicator is the update, this new indicator. That's all it is. So I'm going to set this to the 5-minute chart. And I'm going to set the opacity to like 125. 255 is full opacity. 255 is the color scale. Full on color is 255. This is about half. And it's going to give me the value and price of the auto lines, which are the channel lines, the baseline, which is the trend line, and then the median lines. I don't have the warning lines and all that programmed in here. Those are going to be in the new reader, the new update. You see what else this was, guys? The swing low. What was it? We had broken out of this channel. This upper median line. We had broken out of it, pulled back to it here, took off, and then came back to it again here and just took out that low barely and then went. I had bought this low, Bobby had bought this low and all of that, and I got stopped out by 2 ticks. And then that happened. Because my stop was way too tight. I think I had like a 6-tick stop or something stupid. And then you add that and it will actually plot on the chart, on the lines. It's going to access the lines that are closest to price. So if you have multiple down-sloping trend channels on here, it's going to highlight the one that's closest to price. So the one that is active is the one that is closest to price. I suppose I could make those a little bit bigger. I made them dashed so that you wouldn't get this big line that goes from here, from the active one up top to the active one down here. So it's only going to be active after the second click. So this is where we click on it right here. It's the second click. So this is essentially the start of the channel. Oh, and I got my trusty new toolbar right here, which gives me a vertical line through all panels. Whoops, 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 whoops. Yep, something's wrong. Fabulous. There we go. So that's where that channel starts. This is where this channel starts. And this channel right here starts right there. So you can see as we're coming down from here, this is my active downsloping baseline. This is my active downsloping trend channel line. This is my active center median line. This is my active downsloping lower median line. This is my active downsloping upper median line. And we can create all sorts of different conditions in Bloodhound and BlackBird using this indicator because it actually gives us, the value of the, yeah, he gave you the password there, Jim. It's Daniel, lowercase. And here it starts to change on this bar because now this baseline is the one that's closest to price, you see. I go into pretty extensive detail in the first 30 minutes of that video from yesterday about this. But that's the only update, is that indicator, the reader value. I think there were a couple of minor bug fixes, nothing that you would notice. And then we're going to take it, I have to think about that a lot more, but we'll have to be able to identify, like Surajit was talking about, how wide the channels are. And I don't know how that's going to work if you only have one channel on the chart. I don't know. There's a few more design questions I have to answer as far as how many areas we're going to be allowed to access. What if there are 6 channels on the same chart and you want to use one channel for the entry and then you want to use another channel for the target and then another channel for the stop? How would you be able to differentiate? Well, with the new toolbar, one way that we'll be able to differentiate is, let me just delete all of this and show you. One way, what the heck? All right, check this out. This is going to be pretty neat. So let's say I have all of these different lines on the chart. And this is the new toolbar. And watch this. I click on it, I hit Control-C, and it copies array. And I'll be able to access each one of these individually. So we're developing an indicator now which really cool. Let's say that we have 5 baselines. Let's do this like this. Let's say we have, this is one baseline. See how these lines are infinite now? They plot into the infinite future. I may make it to where they draw past the margin or have a control to draw past the margin. Right now, they don't draw past the margin visually. So let's say we have 3 of these lines, and they're all 3 baselines. And I want to access this one for a target up here. Say it comes back from 2 swing highs back here. This one for an entry, and then this one for a stop. Well, I can have a reader. This is a new indicator I'm talking about for a baseline, and I can have that reader for 3 different baselines. I can set one to only read baselines that are Indian red. I can set one to only read baselines that are yellow, and one that only reads baselines that are spring green. What happened here? Colors are not adjusting. Huh. There they go. This would be one for the stop. This would be one for the entry. And this would be one for the target. Okay? So the one for the stop, I want fire red or Indian red. The one for the entry, I want yellow. And the one for the baseline, I want green. What's going on here? Oh, because I was already selected it. Okay. So you have to deselect it, and then there you go. Okay, so this inside of the reader would be a baseline, but only those baselines colored spring green will act as my profit target. This would be a baseline inside of the reader, but only those baselines that are colored yellow will I use as an entry. And then this is a baseline, but only those baselines which are colored Indian red will I use for trailing stops. Isn't that pretty awesome? So that's something that we'll be able to differentiate with the next version of the toolbar and then the next version of the reader. I mean, there'll end up being 10 or 12 different readers, you know, one for different indicators, one for Divergences Pro, one for the swings from other charts, one for different moving averages from other charts and the ATR, and then one for all of these different colored lines. Cool. Pretty neat, huh? Yeah, it's going to be nice. It's going to be very, very nice. So that's coming. Anyway, I'm done. So I'll talk to you guys in the trading room tomorrow. Any other questions from anybody? Going to be pretty cool, isn't it? Can't wait. It gives no entry signal at all. Well, did you draw the areas on the 5-minute and the 30-minute and the 1-minute? Because it's requiring that you have the areas in the market geometry on the 5-minute. And it's only going to work on the 23rd of August for this one example. It's requiring that you have this drawn on the 5-minute. All right, that's got to be drawn on the 5-minute right there. And then, no, No, that's fine. I mean, nobody knows if they don't ask, so. And then this area has to be drawn on the 1 minute. This is on the 23rd of August. Whoops. Oh. And then this has to be on the 30-minute RTH. And I'm using non-back adjusted data, and that might be a problem for you. You probably won't have these areas come together correctly with back adjusted data. I don't think you do at all, actually. I think it goes right through that lower median line, which is one of the reasons why I'm using non-back adjusted data now, because I think it's actually better for the higher time frames. So you have to have that lower median line on the 30-minute. You have to have that channel line on the 1 minute right here with double divergence, volume divergence, and then that channel line right here on the 5 minute, as it just barely breaks that low by 3/4 ticks. 3 ticks. Amazing. And this is another reason why I like non-back adjusted data. Look at how smooth that is. Actually, this is going to be the same on yours anyway. The rollover was right here. This gap, this gap is filled on yours because you have back adjusted data. Whereas on mine, that gap stays because it's not merging and adjusting the contracts. And I think that data is better because these are actually representing true prices that were traded. Whereas back adjusted data is not representing true prices that were traded for the historical. You do use non-back adjusted. Okay, good. I mean, I can't say beyond the shadow of a doubt that it's better for sure, but I'm leaning that way. It kind of became a topic of conversation more and more. So then I started looking into it a bit more deeply. And then kind of starting to think that it's the way to go, non-back adjusted. For intraday charts, it's really not going to affect all that much. All right, everybody have a good afternoon or good evening, and talk to you in the morning.